much anticipated 12,500 crore IPO of HDB Financial Services opens for subscription today. Let's get in. Remember, it's a leading diversified retail NBFC with the loan book exceeding 90,000 crore rupees. Is it worth subscribing? Let's get Shweta Daptardar, Vice President BFSI Elara Securities, to tell us that. Shweta, good having you. Thanks for joining in. Well, the pricing has come in a lot more reasonable than what the private markets were anticipating. But at these prices, is HDB Financial an IPO that you will tell your clients to subscribe to?
Yes, morning. Definitely at the upper price band of 740 rupees, HDB Financial Services would be trading at less than 3x FY26 estimates. So, which is definitely at a very steep discount to larger players like Bajaj Finance or Cholamandalam Finance in the space. So, at this current price brand, the fresh investors would definitely make some good sum of money. So, yes, it's a subscribe on listing.
But when you compare it with its peers, and you saw, and it's not necessarily a like-to-like comparison, but if you look at a Bajaj Housing, for example, that came out last, and of a similar size of book, a lakh crore or thereabouts when it went to IPO, just below that, how do you compare with NBFCs of a similar size?
Yeah, right. So look, HDB Financial Services is a well-balanced, diversified product franchise wherein they have focus on MSME lending, with 39% of their book is dedicated towards enterprise lending. Then you have another 38% towards asset finance or vehicle loans, and 24 odd percent towards consumer credit or consumer finance. So it's a well-diversified franchise. And in fact, in current market scenario, the way NBFCs have navigated peculiar challenges for FY25, that we saw diversified business plays are the sort of players where we are placing bets on. So HDB Financial Services, as you rightly mentioned, with a book size of over 1 lakh odd crores, compares and is favorably positioned in the current market scenario in the entire NBFC space. And the valuations from the forward multiple perspective definitely again puts them in a sort of in a competitive edge positioning.
So Shweta, just very simply put, this is a buy from your point of view?
It's a definite buy, and if you look at the numbers quickly, so it's a 14-15% ROE business model as on today, but definitely poised to sort of expand over 16 to 17%, and that would position him strongly as against that likes of Chola and Bajaj, who are around 19 to 20% kind of ROEs.
Okay.
HDB definitely had certain hiccups on asset quality front. But I think larger part of those worries, COVID-related worries, are behind. So definitely almost 18 to 20% AUM CAGR is imminent for next 2 to 3 years.
What is the kind of listing premium you're expecting? And what do people who may not get, I mean, it's a large IPO, so maybe better chances of getting allocation or allotment, but if you don't, then what should be the strategy? So 2 questions there.
Yes, so you're right. It's highly likely to list at a higher premium, given the fact that it comes with a strong pedigree, also a high AAA rated credit rated agency, credit rated NBFC. So definitely, we are expecting a sort of robust listing. For the investors who might miss the bus, I think valuations anything about 3.5x or closer to 4x would be slightly expensive. I mean, that's where I believe it could sort of climb towards the once it gets listed. So if you compare still with Bajaj Finance, which is trading around 5x forward multiple, and even Chola, which is closer to 4.8, 4.9, then I think still HDB Financial Services, which is currently at inflection point as well, from the business and financials perspective, definitely comes as a strong bet, and we would still maintain a buy.
Got it. Okay, so you would still maintain a buy. I'm just wondering whether you anticipate, a very quick answer here, whether you anticipate that the loan growth, which has been a bit of a question mark for the industry as a whole, do you think that's going to be the immediate challenge? What, according to you, should investors or prospective investors of HDB look out for as potential challenges?
Yeah, so last 5 years, you're right. The AUM CAGR has been around 15 odd percent. Apparently, they had a certain decline in FY22 thanks to the COVID-led challenges. Going forward, like I mentioned, given the fact that the loan book or the product franchise stands pretty diversified across key portfolios. So be it MSME, be it consumer finance credit, with regulator also coming out and saying the unsecured portfolios have definitely seen better customer behavior in the recent periods, and vehicle loans, which is also sort of a cyclical product.
Right.
So I think this kind of product franchise also will enable HDB Financial Services to tackle even cyclical challenges.
Got it.
From the loan growth perspective, better placed.
Better place. All right. Thank you so much for joining us this morning and for giving us a perspective. Of course, that IPO is something you should watch out for.